Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can notice is that we have a market which is rejecting to the upside a quite important historical structured zone. In fact, from this level, all these previous rejections to the downside were created. So every time the market tested this zone, it rejected it to the downside, and then the market broke above this level with this impulse. Now, when you have a very strong level of resistance and the market is respecting it in multiple occasions and rejecting it to the downside, after they break to the upside, what you would naturally expect is for the market to go and retest this level, because what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. So you would expect a retest and then a rejection to the upside. And that is exactly what happened here. The market, after the break, went for the retest and is currently still in the process of rejecting this quite important structure level to the upside. Now, what we can notice is that clearly at the moment the uptrend is intact. In fact, we can notice how we got the impulse, correction, new higher high, new higher low, and now we just got yet another new monthly higher high. So the market is still currently creating monthly higher highs and monthly higher lows. So here in the monthly, everything looks quite bullish. Now let's keep this in mind and drop down on the weekly time frame. From a weekly perspective, the pattern and structure that this market has is quite clear as well. We can notice how clearly we were in a strong uptrend. Then we had this consolidation period in the form of a triangle formation, and then the market started creating the continuation to the upside. Now, this is a quite popular pattern when the market creates an impulse, and then after the impulse consolidates in a triangle formation, usually you then get the breakout to the upside. This is a very important and very familiar pattern that you probably already know about. And so far, gold has been behaving exactly as you would naturally expect when you have a triangle formation and you're currently in the process of the breakout to the upside. What we can also notice here is that the market has just broken above the previous weekly resistance. In fact, from here, this is where the previous rejections to the downside were created. And at the moment, we can notice how the market is breaking above that zone. Now, if that would be the case, again, as we saw previously, previous resistance in the market after this broken to the upside becomes support. So at that point, there would be a good probability to see a potential retest of the level and then a rejection to the upside away from the zone. Now, dropping down on the daily time frame, what do we see? Now, here on the daily, I spoke about gold quite a few times in the past. I spoke about it after this M pattern when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Then again, after this impulse and correction, I explained all the reasons for which we could expect this push higher. Then from here, I explained all the reasons for which I was expecting a retest of the level and a rejection to the upside. And again, from here, I explained all the reasons for which the market had a good probability of retesting that zone and creating this rejection to the upside. And with the very last analysis, again, I made a full breakdown explaining why I was expecting first this correction and then a new daily higher high, which again is exactly what the market did. And by the way, I will link all these previous analysis in the description so you can go and check them out for more free education. But at the moment, what we can notice is that the market has just broken out to the upside above a quite significant resistance zone. as we have seen previously also in the weekly time frame, this zone is the previous supply and resistance from which all these rejections to the downside were created. Now the market broke above the level. So all this previous resistance is now once again turned support inside of this zone. We can also notice that this is actually a confluence of support area, because as we have an impulse and now the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse zone. And this shows us how we have the 50%, 0.618 and 0.786 retracements lining up exactly with this previous level of supply and resistance. So we have confluence of support here because we have multiple layers of support lining up in the same area of price. So if the market will go and retest this level, there is a good probability that we could see potentially more institutional longing that could further increase the probabilities of a potential rejection to the upside away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for gold, we can notice how with the last reports, we went from 234K net positions up to 299K net positions. So we can see how currently institutions are sitting with 338K longs compared to only 38K shorts. This means that institutions are currently aggressively positioned to the bullish side for gold, therefore making it stronger. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will go and retest this level, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.